No conviction in the market with regards to the movement on the JSE All Share today, down 0.2%. We are looking far better than what we saw earlier in the trading day. But again, Rhynhardt, nothing to really write home about, even on the volumes front.
Yes, definitely. It's kind of that time of year when volumes do actually tend to fall off, and I think investors are a little bit perhaps slightly disappointed by last week's meetings in Europe. Not the kind of news flow that kind of the market needed to kind of move forward. So now we look forward to next year, and I think it's going to be a very difficult year. I think very slow GDP growth numbers loom for like 2012, and equity markets have certainly, I think, discounted a large say portion of it. The South African market is trading relatively close to its all-time high in rand terms, so I'm not very excited about SA equities. But I think we're going to see very little conviction going into year-end, with perhaps the kind of normal rally, say maybe the last week or so. But I think it's going to be on very light volume if it does happen. So a fairly uneventful December trading month.
With regards to some of the sectors, and let's hone in with regards to the platinum sector. Implats pretty much flat today, down around 0.2%. We had Anglo Platinum also trading on that flat line today, Rhynhardt. A bit of negative news with regards to the platinum production and output that we've seen in South Africa, and that because of a lot of stoppages that we've seen over the last period. We spoke to Mashima Gama a little earlier today, saying that platinum stocks don't seem to be going anywhere for quite some time. Would you be buying into the sector right now, or do you think it's just too risky?
It's quite a difficult one, in that the platinum sector has been one of the worst performing sectors the last 12 to 18 months. So I think value investors are certainly drawn to the sector, even though the PE multiples seem relatively high. But then you have to bear in mind that the level of earnings is in fact very depressed. And that is really partly due to the strong rand of, say, the last 12 to 18 months. Now it is, I think, slightly weaker, obviously, so that'll be like a bit of a tailwind going into next year. Dollar platinum prices are relatively weak, and that's understandable because the main market for platinum is in fact the auto sector in Europe, and we all know that that like the next year or two is not going to be great from a growth point of view in most of the European market. So the equities is a very difficult one, and I would probably say it's probably the most difficult sectors for investors to get their like heads around. I think earnings downgrades are certainly looming from most of the sell side analysts. It's not going to be a great reporting season for them early next year, and you have pointed to safety stoppages which have affected their like production. So I would probably just sit on the sidelines. If I had it, I would hold on to it. I think it's a little bit too late to sell now, given the relative underperformance, but I can't really see a catalyst for it, and I think it's probably just going to go sideways for a while.
So Rhynhardt, give us an indication of your thoughts with regards to ArcelorMittal and Kumba Iron Ore, both stocks on that flat line today. Hopefully you can get your head around this specific topic. We are of course going to be hearing the ruling, but it's only part one of the ruling, so we're not going to hear too much news. At least this is what the media reports are saying.
Yes, I think the ruling that we're going to hear on Thursday really relates to who is going to get the 21.4% mining right. Is it going to go to ICT, or is it going to go to Kumba or to Mittal, or is it going to revert back to the state? I would probably think what's going to happen is that I think that ICT will be thrown out. I think the mineral right will either revert back to Kumba, meaning that they will own 100%, and then the state and both Mittal as well as Kumba will then have to strike some kind of agreement with regards to the supply-like agreement of iron ore to ArcelorMittal, or it's going to revert back to the state, and then both Mittal and like Kumba iron ore will be allowed to then make some kind of sort of like an appeal, basically, which will lead to round two of the discussion. So I think it's going to be extremely complex, but base case is I don't think Mittal is going to benefit from the cost plus 3 agreement like they have had up until 18 months ago. I don't think Mittal is going to pay market prices either, because the company will really struggle to make an adequate return. So I think actually the current, say, pricing agreement, whereby I think Mittal's buying iron ore at roughly about $65 a tonne could actually be extended for another couple of months until there's further certainty. But it's a tricky one at this point. I think it's going to be a bit of a non-event because I think the status quo will probably just continue, and then next year there will be further news flow on the matter.
Let's touch on Bidvest. It's down around 1.6%. Quite surprising though, given the fact that Fitch increased its outlook on the company to stable. What is the investment case for the likes of Bidvest? It seems that it is one of those stocks that makes up for quite a large chunk of most growth portfolios.
Look, I don't think that there's a lot of earnings growth that's going to come out of Bidvest in the next year, but certainly not major earnings decline. You know, their portfolio is relatively well diversified. The company has a good management team. It has a strong balance sheet, and it kind of fits into the category of large kind of multinational, say companies that investors are drawn to in relatively uncertain times. The forward P multiple is roughly about 11 times, which doesn't seem very expensive, but it's kind of in line with its like historic average. So we kind of relatively neutral on it. I don't think it's very exciting. But having said that, I think going into next year, into an environment where I think it's not going to be a great year for markets, I think there are certain sectors of our market that is very expensive, especially our local domestic shares. And in that environment, I could see a company like Bidvest doing relatively well because it will be seen as some kind of a safe haven. The P multiple perhaps can actually re-rate a little bit further. The dividend is very secure, even though it's only, I think, about a 3 to 3.5% yield. So it's quite hard to make a strong case for it. But you know, if I did have it in my portfolio, I would certainly hold on to it.
Rhynhardt, let's touch on the employment numbers out in South Africa today. A 2.5% year-on-year increase for the third quarter. We know that to increase jobs substantially in South Africa, we need to see above 3.5% growth. We need to hit around 7% growth to meet the target set out by our president. Do you think this is going to be a negative for the earnings outlook going forward? What is your sense in how it's going to affect earnings for the big corporates out there?
Yeah, look, I think it's certainly a sign that there's certainly a fair amount of corporate strain on the profitability front, and that major corporates do have to revert to laying off staff. It hasn't only been a trend in the mining industry, even though we have already spoken about the platinum sector, which have really been hampered with a strong rand, but the strong rand has also affected most of the manufacturing sectors. So, you know, I don't think it's going to be a great year for job growth. I think in the financial sector, there's still going to be further layoffs, further retrenchments, and I can't really see that employment number growing much going into next year. In fact, I would probably go so far to say that if SA GDP does tend to be maybe, I think for 2012 it could come in anywhere between maybe 2.5% and 3%. I would say probably closer to 2.5%. I think that job growth is probably going to lag GDP growth. In fact, saying that we will most likely shed further jobs into the new year.